Zimbabwe's ambitious plan to establish the gold-backed Zimbabwe Gold ZiG as its sole currency by 2026 faces significant headwinds just 5 months after its introduction. Despite initial optimism, the ZiG has lost nearly 80% of its value on the black market, sparking concerns over its viability, with foreign reserves dwindling due to increased grain imports and locals showing reluctance to adopt the new currency. Zimbabwe's economic stability hangs in the balance. As the ZiG struggles to gain traction, traders and business owners are increasingly skeptical, opting instead for the reliability of the US dollar. Joining me for more on this, I have Dr. Chitambara, a developmental economist. Thank you so much, Doctor, for joining me today.
Thank you so much for having me. Good afternoon.
Good afternoon to you too. Yeah, it's afternoon where you are, so yes, good afternoon. All right, so looking at this data, which of course we got last week, that was on Thursday thereabout, from 13 ZiG to $1 at launch to between 20 ZiG and 26 ZiG to $1 on the black market, and of course for the official market, 13.9 ZiG. Looking at all of this happening in 5 months, how much of an issue do you think it is?
Definitely, it's a major issue of concern to the central bank, to policymakers, because it then creates inflationary pressures in the economy. So any depreciation of the ZiG, whether on the official market or on the black market, is not good for the economy. It creates macroeconomic instability. So I think it's a big issue. And the central bank has assured us that it's an issue that they're actually working tirelessly to try to address.
Well, 5 months down the line, did this come earlier than you expected, or you didn't think it would happen at all?
No, I think we always we were cautiously optimistic, given where we have come from. I think there's still a serious death or gap in terms of the trust and confidence in the local currency. So it's something that we always thought was a significant downside risk. And also the fact that we don't have adequate reserves to provide adequate cover or sufficient cover to the ZiG was always obviously a major concern. So I think those are some of the areas that we need to address, but it's not going to be easy to address those areas because it's building reserves. Obviously, it's a process that takes a bit of time. It's not an overnight event. And also this year, like you rightly pointed out, our import bill has actually increased quite significantly because of the drought. And the softening in commodity prices obviously has affected our exports. And also even the drought has also affected our agricultural exports. So this year is particularly challenging on the macroeconomic front on account of the drought. So the pressure obviously on the exchange rate has been exacerbated by the climate-induced shocks.
Well, let's talk about solutions now. I mean, some factors have been highlighted as either remote or major causes of what the ZiG is currently experiencing. You've mentioned one of them being lack of confidence in the currency by locals, and also the pressure on forex as a result of demand, and one of the demands being for the importation of grain. Now, talk to us. How do we begin to solve these issues, including the ones you also highlighted?
I think first and foremost, we need to sustain discipline, both on the fiscal front and on the monetary front. Now, I was looking at the numbers in terms of money supply growth between when the ZiG was introduced in April and also June of this year. Broad money supply has increased by almost, in fact, reserve money has increased by almost 47%, while broad money supply has increased by 10%. So already we are beginning to notice that money supply is beginning to grow at unsustainable levels. So I think it's an area that we need to control. But that must be complemented by a fiscal policy, again, that is conservative. So we need to tighten things up, both on the fiscal policy front. In fact, the fiscal policy has always been the major challenge in Zimbabwe. Because what has tended to happen is that public spending is outstripped revenues. And as a result of that, the government has sought a recourse to the central bank through the monetary financing of the growing deficit. And this year being a drought year, there's a lot of pressure on public spending. And revenues are actually not able are not adequate enough to meet that increase in public spending. So I think that's also what is causing some of the problems that we're actually having, the pressures on public spending with inadequate revenues to finance that. So if we're able to sustain that trajectory of fiscal and monetary prudence, I think that will go a long way because that has an implication on inflation. And as long as we are able to keep a tight rein on inflation, that goes a long way in terms of restoring confidence and trust in the Zimbabwe gold, in the local currency.
Well, still talking about trust, I'm just wondering, doesn't it bother you that certain businesses charge exclusively in the dollar? I mean, I would have thought that, they would be patriotic. I mean, what's your thoughts on that?
It's a major challenge, definitely. When there is chronic high inflationary pressures, obviously, businesses and even other economic agents want to hedge themselves against that chronic high inflation. So the tendency is that people then substitute the local currency for a more stable currency, which in this case is the USD. So I think what is happening is just a rational behavior by economic agents, primarily the business sector.
Well, I see that the government had actually tried to ensure the adoption of ZiG with some guidelines and regulations, and one of them being the use of ZiG for payment of taxes. That doesn't seem to have worked, and now we have the government saying they probably need to expand some of the taxes that can't be paid with the ZiG. How much of a solution will this be, and what would you say is responsible for the shortcoming of this particular guideline?
So the idea there is to try to create and to sustain a strong demand for the ZiG, which should have a stabilizing effect on the ZiG. So something that I've been advocating for, that at least some services must actually be sold in the ZiG. But I think the major challenge has been the fact that the fuel sector still remains 100% dollarized, and there's obviously that creates problems in terms of sustaining the demand for the ZiG. So yes, I think it has worked, but I think we obviously need to continue to see whether we are able to create that fine balance in terms of ensuring there's demand for the ZiG, but also without necessarily undoing some of the benefits that we have made over the last few months.
Okay, just this last one before we go. From where you stand, do you think the government will be able to achieve its goal of making ZiG the only currency by 2026? Is that achievable in less than 5 seconds?
No, I think 2026 is still, I don't think it's achievable. We need to work on our reserves. We also need to ensure that we sustain low and stable inflation. Thank you.
All right. Thank you so much, Dr. Prosper Chitambara, for your thoughts on the show today.